A single candle can tell you who's winning the fight between buyers and sellers, if you know how to read it. These 5 patterns show up constantly, and once you can spot them, your charts stop looking like noise. Anatomy of a candle. Every candle has a body and usually wicks on either end. The body shows the range between the open and the close. The wicks show the highest and lowest prices reached during that period. A long body means strong momentum in one direction. Long wicks mean the price was rejected after testing a level. Bullish reversal patterns. The hammer forms after a decline, a small body near the top of the candle with a long lower wick, showing sellers pushed price down, but buyers dragged it back up. Bullish engulfing is a 2-candle pattern where a green candle's body completely covers the prior red candle's body, a sign buyers have taken control. Bearish reversal patterns. The shooting star is the hammer's mirror image, forming after a rally, a small body near the bottom with a long upper wick, showing buyers tried to push higher, but sellers took over. Bearish engulfing is when a red candle's body completely covers the prior green candle's body, signaling sellers just took charge. Indecision. The doji. A doji has a tiny or non-existent body, meaning the open and close are almost equal. It shows neither buyers nor sellers won that round, often a pause before a bigger move, especially after a strong trend. Why context matters. The same candle means very different things depending on where it forms. A hammer at a random point in the middle of a range is far less meaningful than a hammer sitting exactly on a support level. Always read a candlestick pattern together with the level or trend it appears on. A word of caution: don't trade a pattern in isolation, just because it has a name. Treat these as clues, not signals. Combine them with support and resistance, trend direction, or a wider strategy before making a decision. Hammer and bullish engulfing lean bullish, shooting star and bearish engulfing lean bearish, and doji means indecision, but location is what gives them meaning. Go find one of these on a chart you're watching. If this helped, subscribe for more Forex basics.